And welcome to the IFX Expo International 2026. On behalf of the Ultimate Group and the entire team behind IFX Expo events, thank you for joining us. After hearing from the SciSec and setting the regulatory scene for the event, it feels natural to begin our conference agenda with one of the most influential and transformative sectors in financial markets, crypto. Whether you're a broker, liquidity provider, institutional investor, or technology provider, crypto is no longer a separate conversation. Over the last few years, we've seen crypto move from a niche asset class into a force that influences everything from trading technology and regulation to investor behavior and product innovation. But as we've learned many times before, markets don't move in one direction forever. So this brings us perfectly to today's discussion, Bull Hangover, who survives when the music stops. I'm joined by the exceptional group of the industry experts, and before we dive into the topic, I'd like to give each of our panelists a moment to briefly introduce themselves. So the stage is yours.
Thank you, Duška. Hello, everyone. Hangover is definitely here after yesterday, but it's a different story. My name is Andrei Stoichev. I'm having my own brokerage company, VS Capital. Our, let's say, selling point or niche is providing crypto liquidity. So that's why I'm really excited about this panel. Sounds like exactly on the spot based on what is happening now in the current market conditions in the digital assets. So I'm looking forward to discuss.
Hello, I'm Tom Higgins, and I'm CEO and founder of GoldEye. We are a technology company. Liquidity bridge company is our primary product. We've been going 18 years, so we obviously started before the digital asset crypto industry was around. We've integrated with hundreds and hundreds of different liquidity sources on the maker side, and on the taker side, many platforms on that side. Very interested in the centralized finance and the DeFi model and the overlap between traditional assets and digital assets.
Hello everyone, my name is Anton Golub. I'm the founding member of RWA Labs. We are a group that's involved in tokenization of real-world assets, predominantly in the United Arab Emirates.
Hello, my name is Bas Kooijman, CEO and asset manager of DHF Capital. We are a Luxembourg firm. We are managing assets for high net worth individuals. And we are also supporting traders to have their own fund and become an asset manager or a fund manager if you have multiple strategies. So very interested to see that Luxembourg still has a bit to catch up on the crypto regulation side, but we are getting there. So interesting.
Hello everyone, and thank you for the invitation for one more year. I am Andreas. I've been in the crypto ecosystem for around 11 years. I've worked in some major crypto exchanges like Binance and BitGet recently. Currently a casting member at the Uni of Nicosia on crypto and AI topics, and pleasure to be here.
Thank you, everyone. So let's start with Andrei. You worked across multiple market cycles in both traditional and digital markets. Looking at today's environment, are we simply seeing another correction, or do you believe that now we are entering a deeper industry reset?
Well, I think it's something very normal and expected, let's say. We all know maybe we trade more or less, but the market is not going only in one direction. So it's normal to have this correction, and especially moving money from one asset to another because we find another opportunity moving. Money moving is a very natural thing for the industry. And still, obviously, crypto is suffering of this liquidity issue. It can be much better, but also there was some IPOs around, there was some problems in Middle East, many things were happening and how can I say, pushing the price of the crypto one way or another. But we saw this a few years ago, we saw in the past, we saw this with other assets, so I think it's actually an opportunity, especially in our industry to become better, to start providing even better services to our clients. Now we are having a chance to start being more digital, so we can start offering spot crypto if we are regulated. MiCA is coming next week, basically. So to prepare ourselves to meet the next bull run where we will be ready to accept all the quants who are waiting for the new crypto wave.
Yeah, this is actually something that Tom also argued, that this isn't simply a bull and bear cycle, but a functional change in the industry. So what makes this cycle fundamentally different from the previous ones?
Yeah, so the way I like to look at this is the sort of hype concept of something new comes along, it gets incredibly exciting. There's a Gartner hype curve, is a traditional thing that is always used, and it's always accurate actually. So something comes along, it gets incredibly exciting, everybody goes mad, it then goes, you have a few cycles of this, it goes up and down, but then it levels out onto something sensible. And I think we've gone past the hype bit to now there's something sensible bit. And where this sensible bit leads us is where you've got, and why it's such a fundamental change is where you've got the traditional asset market wanting to get into digital asset market. And I call it digital asset rather than crypto because crypto really, to a lot of people, means punting on Bitcoin, and it's a different thing nowadays. You've got real world assets, you know, as you're doing on RWA Labs, which are real things, real tokenization of real things that you can actually do. And then you've got the DeFi markets, like with Hyperliquid, for example, that have come in a couple of years and completely changed what you can do and what the market can do. Fundamentally, I mean, the amount of trading is absolutely enormous that's grown from almost nothing a couple of years ago. And then the centralized exchanges, the digital asset exchanges, moving into traditional assets but trading in a digital asset way. That's why I think it's a big fundamental change, but an absolute positive for the whole of the industry together.
And now I want to ask Anton, so having worked across these exchanges and market making and now tokenization, what do you think, what changes you believe will have the biggest impact on the industry over the next few years? And what is happening now at the moment?
Yeah, so I would say there are two big drivers for the next cycle that's coming. First one is tokenization, and the second one is the change in regulation in the United States, right? Now, for the first point, you can say, well, Anton, you're doing tokenization, so you're kind of now, you know, blowing your own horn. But the reason why tokenization is very important is because it enables what you kind of mentioned, Duška, is actually a convergence between two very much initially different industries, right? So you can converge the traditional finance industry, where you have many different types of assets, right? And you can converge actually the digital asset industry, the crypto industry, right? And when I talk about tokenization, I think the biggest added value for all of you here, if you think about why should I care about the tokenization, is because it's about access. So it's about giving access to assets that are high quality, high yield, great return to people all over the world. So that's the end vision. Now, the big driver to enable that is, that's why I think we had the chairman before, is actually a global, unified, and harmonized regulation, actually, right? Because in order for me to offer an asset all around the world, actually, I need to have a regulation. I need to do the demand regulation. And the second big driver for the next market cycle is actually US-specific regulation. Why is that the case? Is because for many years, US administration, US politics, US regulators were very hostile towards crypto companies. So if you are a crypto company, US was the worst place you could go actually to build your business, right? Or one of the worst places. But on the other side, US is the biggest market on the planet, right? If you want to allocate capital, if you want to raise capital, if you build something in finance, US is the place to do. And now the big specific thing within the US regulation, this is something that Tom mentioned, the big opportunity will be bringing perpetual futures under a regulated framework in US. That's both for centralized exchanges, but for decentralized exchanges like Hyperliquid that you mentioned.
Okay, thank you, Anton. And now to hear a little bit of the investor's perspective from it. What characteristics makes a financial business resilient during these periods of uncertainty and lower activity?
Yeah, I want to kind of add to this. We are coming from the securitization market. So securitization is just the old way of making notes out of a real world asset. That moves into tokenization, and especially this access. I think that it's not possible for a lot of people to invest in certain hedge funds because of the minimum requirements. And when we are able to notarize and later securitize and then go at the end towards the tokenization side of it, it becomes really available. On the resilience side, I think what we always advise fund managers to do is that there's mostly two forms of revenue for them. And one is the management fee and the other one is a performance fee. Traders are really well versed in just being paid on a performance-based side, but to build your fund and to look at the back office cost constantly rising, especially due to the regulatory side and all the changes that almost every year have been made. Very important to keep the cost side of a fund based within the management fee. And then you can go on forever as long as you make the ups and downs and the investors wants to stay with you during the ups and downs.
And Andreas, now, I would like to hear your perspective, what is happening in the centralized exchange industry right now that the rest of the market should be paying closer attention to.
Yeah, I think I can touch upon the points that Anton made. Obviously, we're seeing I have also seen it internally, internal shift of the focus, the resources, the campaigns are being shifted the last 6 or 7 months towards the TradeFi, traditional instruments like tokenized representations of gold, of metals, indices, forex, oils. Most recently, we've seen pre-IPO access through a tokenized representations also from the exchanges. So this is a major shift that is now being happening internally on exchanges. It is being reflected on how they approach their users also. So this is the one part, and I would also like to add, besides obviously US regulation, which affects the operations of these kinds of platforms, if we are talking about us as EU users, we have to also pay attention to how the exchanges react to MiCA and MiFID requirements. If I am not mistaken, only Kraken, Coinbase, and Bybit from the top tier exchanges have both licenses. In order to launch and market these TradeFi instruments in Europe, you have to have a MiFID license also. We are seeing Binance struggling to get the MiCA license. They have just been rejected from the Greek regulator also. So we also should be paying attention also to what happens on the regulatory front as well, besides of what is actually being offered.
Okay. Andrew, which business models are most exposed during a market downturn? And can smaller brokers survive another prolonged low volume environment that is happening?
Well, it's a good question, especially based on what we were discussing now, how crypto exchanges are entering in the traditional finance world and how brokerage companies can need somehow to adjust to the crypto world. Because when you are a crypto trader or crypto user, if it's Saturday, Sunday, or during the night, you expect everything is working. You can always trade. That's why these digital traditional finance instruments like gold and forex and indexes on top, also stocks. We can see recently the stocks start being 24/5 or maybe 24/7. Means that brokerage companies need to start thinking about offering these services 24/7. Otherwise, it's natural if I trade gold, let's say, to avoid all the gaps, all the problems during the weekend and waiting just Monday morning to open the market. I just going and trade in a platform where this is possible. So I think this will be the main thing for the brokerage companies to adjust themselves to find the good liquidity, to find the good places to STP this business, because it's not so easy to trade gold during the weekend, of course. But with the resources which digital companies are having, crypto companies, it will be much easier for them to attract all the clients around. So together with what we were discussing and preparation for the next bull run of the brokers to have a good crypto offering, we need to think about how to offer all these services 24/7 to match the need of the market.
But as an individual, would you prefer buying digital gold or physical gold?
If I'm speculating at the price, I don't really care. Okay. If the liquidity is there, if the price is fair, I really don't care, because at the end of the day, I need to buy a lower price and to sell the higher price, and that's it.
Yeah, that's the main point. Right?
Very simple.
Okay, Tom, you said that when volume drops, simply marking up an exchange fee is no longer enough. What separates the business that survive from those that struggle?
Yeah, this is when prime brokers sort of started in digital asset space. It was quite a common model just to take from Binance, stick a big fat spread on it, and then sell it out because people didn't realize they couldn't really access. They could access Binance directly, and that has gone pretty much. There's just that model doesn't really work anymore. So you've got to have proper crypto liquidity, digital asset liquidity that is it's different to just coming off an exchange. Coming back on the previous point as well, I think brokers have got to look at the value that they add, because if you look at a younger generation of traders who have grown up with social media, are much more connected and understanding of what's going on in the trading world and the gambling and the speculation world, they won't just accept that I go to a brokerage rather than I go to a DeFi exchange or I go to a digital asset exchange that's offering other products, the traditional products. So that you have to sort of step back and I think say, what do I add as a broker? Am I adding enough value to be able to carry on existing? And there are industries in the past that didn't do that disappeared. There's Motorola, Nokia, things like that. They owned the mobile phone market and they completely disappeared because they didn't step back and look at what value they added for people. Something else came along, like Apple with their iPhone, that the BlackBerry laughed at, Motorola and Nokia laughed at, and they lost out completely. So I'd say, look at this new generation of traders to what they need to be able to deliver the right sort of services that they need and add the value that they're going to get.
And do you want to add something, Anton? Because I wanted to ask you do you believe that exchanges, market makers and token projects are equally exposed in the current environment, or some of these business models are facing higher structural risk than others?
Yeah. So even though the digital asset industry is currently objectively in a bear market, like if you look at the prices, they're quite below the all-time highs, right? But then when we look at the convergence between the traditional finance industry and the digital asset industry, the crypto industry, then we can actually understand there's always more opportunities, always interesting products that we can offer to our clients, right? And I'll give you like one clear example that shows that this is possible and where the exchanges are benefiting in a bear market is the SpaceX IPO, right? So the SpaceX went public on Friday, right? And there was a lot of excitement, a lot of upside, right? And a lot of opportunities for traders or long-term investors, depending what you want to do. Now, why is this relevant for the crypto industry? Is because on Binance, which is the world's largest crypto exchanges, the third most traded contract was the SpaceX perpetual, right? So that means even if you offer a traditional product, right, to a crypto crowd, that's what Binance actually has, crypto traders, right? If they offer them a product that they're interested in, then you can actually benefit you as a service provider, you benefit from that, but your clients benefit from that as well, right? So I think that you are exposed to the bear market if you don't offer the right products, because if you look around the world, we see there's many, many different opportunities. The crypto exchanges, market makers, all of these projects, they need to take advantage of these opportunities.
And Bas, one of the trends you highlighted is the growing movement of traders between crypto, FX, commodities. Are you already seeing this happen? And what does it mean for the brokers going forward?
Yeah, I think what we touched upon is that maybe crypto traders are looking into some other assets at the moment. And I think 10, 15 years ago, it was also a really traders market in the crypto industry. Some crypto is maybe better to just invest in and hold in for the longer time, research the projects. It's more the old-fashioned approach, what you would do with a stock. You look at all the fundamentals. The current price, is the price right, undervalued? Okay, then you invest in a long-term company in the crypto space, mostly a project. And I think a lot of, let's say that at least the strategy has changed a lot from the quick buy and sell orders all day towards more of an investment strategy in both digital assets, but also in the move towards, okay, let's mix it with 5% of gold. Let's mix it with a little portfolio of long-term stocks. the Warren Buffett list going around with like, okay, let's just do those 20 because they're easy to maintain. So I think that traders have been in the need to make a little shift till the next bull run comes, and it probably shift back.
And Andreas, what is your experience on this? Are centralized exchanges increasingly positioning themselves as a broader trading platforms rather than their pure crypto ventures?
Yeah, I think it's what we mentioned before, the shift towards traditional finance instruments. Obviously, what was mentioned before, having availability of trading 24/7 outside normal trading hours is very important for the average user. The average onboarding is much more seamless for the crypto native user. So imagine basically you can have an account or a wallet in one platform and be able to trade the majority of all the digital assets around the world is very important for, if we're talking about the average user. But it's not only, advantages we have seen last week with the pre-IPO for the SpaceX token that there was a failure of the third-party provider to issue the underlying shares in three of the top crypto exchanges, and this caused the exchanges to have to reimburse their users. So it's still not a perfect world. I think they even gave like a 5% additional compensation for the users after that failure. So you must still remember that you do not actually own the underlying asset. You are owning a tokenized representation of the asset. But it's certainly exciting times, I think. And as we dive deeper into this integration, we will see more mature products being developed, and generally the industry, I think, will adapt to it easier.
Okay, let's go to the retention and traders' behavior a little bit. Acquisitions costs continue to rise across the industry. So what keeps the traders engaged when markets becomes less favorable, education, community gamification, better products, or there's something else, or all of it?
Oh, it's a mix of all these things, of course. Andreas mentioned something which is very interesting, and we can see easily that when there is a trend, in the last 6 months, gold was the new trend, let's say, and in the last few weeks, SpaceX IPO was the trend. So never mind if you're offering a region, your main thing is crypto or forex or whatever, the trend is gold, and we are going for gold. Gold marketing, gold campaigns, gold promotions and everything. Why? Because if the demand is so high, you are trying to acquire your new clients and to reduce the price of acquisition. Then for the IPO was the same thing. So it's in the marketing, you are constantly searching for opportunities to reduce the costs, because in our industry, cost is the main painful thing at the end of the day. But the good thing is that adding so many markets in your portfolio, you just need to be creative to find the niche and to find the trendy instruments which you can promote to the clients to try to reduce your marketing cost. But overall, yes, that's the reality. All these acquisition costs are going in the wrong direction, let's say. So that's why AI is helping now to reduce the cost, to be more interactive with the client, with the potential clients, to be more creative, to search for alternative channels to acquire clients, like forums, like some specific, very local networks where you target specific clients for specific regions. But it's a game which will never end, I guess, so we'll continue explore the options.
Definitely. And Bas, from an asset management perspective, are traders becoming more disciplined investors, or there is a speculation and it's still dominant in decision making?
Well, statistically, we can already see that about 10 years ago, it was 50-50 between manual orders and between EA, executive advisors, automatic trading. And I think that has shifted to 95% automation. So Traders have found their tools. Now we have AI to make your own tools. So it's definitely easier to execute the strategy in an automated way, and that makes it probably more systematic, less guesswork. Entry has been done automatically, and I still believe in the combination between man and machine, where the traders are finding a way to automate their strategy, but still keep a constant look at it. So probably more systematic execution at the moment than 5-10 years ago.
Okay, and Tom, one of the questions you raise is where smart money is quietly repositioning today. What are you seeing?
Yeah, there's two areas I would say looking ahead, so not today but tomorrow, is DeFi and AI. I mean, we use AI across the board, Claude we use particularly, in every single department, and the difference it makes is absolutely astonishing. We'll probably never need to employ more people, but we can do 10 times as much work. And if you look at what the DeFi market has done, I mean, I use Hyperliquid as an example because I know it best. In 2 years, as they've done $4 trillion worth of trading. They're making enormous profits on such a tiny base of people. I think they've got like 15 people or something, because they've created a market that can replicate, or a system that can replicate any market in the world. Anybody can launch a market on it for free, and then it trades real time globally. So if you take that and then you take the AI influence on how companies operate, and also how traders will generate their, as we've been discussing, their automated signals, I think those are the big game changers that will be important.
Okay, thank you, Tom. And Andreas, where do you see the strongest growth opportunities emerge across the digital asset ecosystem these days?
Yeah, I mean, beyond tokenization, which we already have analyzed quite a lot, I think also stable coins is quite a big concept right now in terms not only of serving the industry as a trading pair, but also as a settlement layer now. We have seen in terms of volume, I think more than 30 trillion last year on stable coin volume. So if you want to, for example, trade financial instruments, USDT or USDC is used as a pair. If you want to get a cashback from a card program of an exchange, we're probably going to get it on USDT. Around 80%, I think, of all the transactions in major exchanges have stable coins as one of the tokens. So I think this is where we should also see stable coins not just as a trading pair, but as a settlement layer. Obviously, for big projects, for like USDT, there are also regulatory struggles right now. A lot of exchanges are being, let's say, forced to delist or restrict USDT in some regions worldwide, like Europe. Some exchanges are taking, a more conservative path. Some exchanges are being more risky and allowing USDT trading. But in general, I think stable coins is a very strong base for the industry beyond the tokenization at the moment. So we should really keep an eye on what's going on and the several projects that are working on these kinds of instruments.
Okay, and we cannot continue the panel without mentioning AI. We already mentioned it, and Bas, you mentioned AI tools and everything, and AI is rapidly changing the industry, definitely. But Bas, how do you see that AI will impact brokers and traders over the next few years? It cannot replace the man completely, but what will happen?
Well, if you're asking a 2-year period, maybe not yet. And a longer period, I'm less positive on that for the people. We are managing one fund at this moment that has 0 traders. It's purely AI agentic trading. Every time there's money being added to the fund, the algorithm chooses itself to add more traders or to add more funds to the already existing AI accounts. And what's very interesting is we have this old-fashioned approach that's not changing with AI at all. You need to build a track record as a trader. You cannot analyze any trader under 200 trades. So the fund started in January. We now have seen that about 170 AI traders were created in 25 minutes of time. And they're all being optimized. So every time a trader does 100 trades, it basically optimizes itself. No trader can have more than 1% of the assets under management. and we believe it will fly over time. But all of these things take time, which does mean that instead of hiring maybe 15 traders, you now have 150 bots. So I think the 1 to 5, 1 person, 5 AI agents, or 1 to 10 is a little bit of a range I hear in all kinds of industries. Instead of hiring one, like 5 marketing people, you hire one with 5 extra AI agents as tools. So there will be then less work. On the broker side, the same. Risk management is being automated very, very quickly. And a lot of the overnight jobs, especially if we go 24/7, you need at least a lot more people. Every firm should look into what they can do with AI or the support of AI.
Okay, and Anton, how do you see AI influencing tokenization initiatives?
So, I mean, AI has been used like in the digital asset industry for quite a few years now. I think it's mostly was like on the boring part. So it was like compliance, it was onboarding customer support, right? I think you also mentioned marketing, right? You could actually do a lot of things with AI. Now, when we're talking about the investment side, we are talking a lot to clients to saying, okay, how do you trade and how can you use AI, for your trading purposes? And we kind of saw 2 approaches. One is the strategic trading or strategic investment, and this is something that we kind of understand intuitively, like this is when you have a strategy and you run it for a prolonged time period in an automated manner. If you ever worked as a quantitative trader at a hedge fund, you kind of know what I'm talking about, right? You have a strategy, there's an indicators, there's some signals, they use AI, and then based on the signals you trade. Where we see a lot more demand when it comes to AI is on the tactical side. So it means there's a specific event happening or there's a specific occasion happening in the market, and you are actually then asking an AI agent to support you in that tactical execution. So that can be SpaceX IPO, that can be conflicts in the region and the oil price moving a lot. And then in that specific context, you're actually using an AI agent to support you and they'll help you invest, right? We see the same actually context in tokenization. Strategic, this is something long-term, this is something automated, people kind of understand it. But I think that tactical part, when the opportunity arises, then people are now turning to AI agents to understand better their strategy and their options, how they can invest and trade.
Okay, and looking ahead, what development or trend do you believe could surprise the market over the next year, Anton?
Surprise the market. To be honest, I think like one trend, I think where we're still, I think there's a lot of opportunities still today where people don't have the benefit actually from a lot of these companies and entities using their own data, right? So I think we're always looking what's our interesting asset classes that we can tokenize, right? And then people say real estate, and you're saying, well, this exists for hundreds of years, right? The stocks, okay. But I think a lot of opportunities where we see in the tokenization space is around tokenizing your own data. So social media platforms have been using your data and benefiting from your data and making money on your data for years, right? Now AI has come. AI works because it's trained on a lot of data. Nobody of us here has been compensated ever for AI model using our data, right? So I think like that's an opportunity where people get a more awareness of their own data that they generate, more control over the data that they generate, and then ability to actually benefit from it.
And Tom, since you're an industry veteran and you saw a lot of cycles,
You're saying I'm very old, aren't you?
Yeah.
I'm talking about the experience.
Yeah.
So what's the biggest mistake that brokers are making today when preparing for the future?
Can I add a little bit on the AI just before
Yes.
I answer that one? There's 3 letters you need to take away and remember, and they're called MCP. Model Context Protocol. Sounds like a technical jargon, but what it is, it's the USB-C cable of AI. It allows any AI to talk to any other AI, any AI to talk to any data source. So if you want, say you've got an AI agent, you've got Claude running or ChatGPT, and you wanted to trade on a brokerage, how does it talk to that brokerage to do that? Well, MCP is the standard, that, like fixed protocol and things like that, is the standard of the AI world. So if you start looking how to connect things together and you see people have MCP servers, then you can connect them all together. So it sounds like technical jargon, but it's one of the most important developments in AI that's come about, is how to make all this actually happen and actually to connect together and actually do real work. So have a look at that. And so what mistakes have brokers done that they've done in the past they shouldn't be doing in the future? Well, Probably not looking enough at AI, I would say now, is one of those things. But also liquidity sources, full multi-asset. The nirvana in a broker, I think, has always been multiple asset classes, cross-margin account, single cross-margin account, and one screen that shows to the retail traders, if it's a retail broker, all of the assets that this person can trade. And I think that's now becoming a real viable thing to do. But it requires really complex plumbing underneath. And as a broker, you don't have to build that anymore now, because we build that sort of stuff and our competitors build that sort of stuff. So it's very easy to buy in the technology to give that nice, clean offering to your traders so they can access across all these different markets. And you don't have to worry about the fact some of it's DeFi, some of it's traditional exchange, some of it's a crypto exchange, some of it's OTC, some of it's probably going to an MCP server to trade on someone's Claude, you know.
Okay, and the question for Bas, what are the key trends brokers should be paying attention to over the next 12 months?
Well, one of the points Tom stole away from me. No, I think APIs and MCP servers is the technical term, is an extremely important option. A few weeks ago, Anthropic and Interactive Brokers launched this collaboration where you just connect your broker account to Claude and you just say, okay, analyze my portfolio. Should I take some profits? Should I buy something else? Make a nice balance, and yeah, people are going to make investment decisions this way as well. So I think brokers should keep up with the technology, where the end users are going to request this kind of open API options to trade. And another thing is the regulation side, because I feel that traditional finance is getting heavier regulated, and new thing that came up last year was KYT. Not everybody knows KYC. We all know you need to do know your customer, passport, proof of address, etc. What we have to do on the traditional finance side is KYT, is know your transaction, which means every outgoing transaction to a broker as well, but also where the transaction goes after the broker executes the orders, have to be in our compliance accounting. Which means basically as much as an investor does KYC with us, we have to do this on every supplier. And not every broker is as open at this moment or ready to be open, let's say it like that, to say like, okay, what's your 5-year track record? Where are your accounting books? Which banks are you using? Which LPs are you using? And that's always been a bit of a black box within the broker. What do you A-book? What do you B-book? Etc. I will not give all the secrets away, but we have to now know how the broker is functioning to be able to forward the funds from traditional finance towards an exchange or towards a brokerage firm. And I think that's something that not all the brokers are ready for either.
Okay, thank you. And Andreas, what should everyone in this room be paying a closer attention to right now? And it's not an AI.
Okay. I always like to see things from a user's perspective. So coming from the centralized exchange industry, centralized exchanges are, if you are talking about newcomers in this industry, they are probably the first step towards getting their first transactions, their first engagement with the sector. So besides obviously regulation that we mentioned before, the products that are being offered also, you should also look at the reputation and the trust of the platform that you are using. I think so there are several platforms that after the FTX collapse have launched the concept of proof of reserves, for example. So basically it's like every user can at any time confirm and validate that their asset belongings are indeed backed up by the exchange, which obviously was not the case at FTX. So that's where the concept grew up. There are other, obviously user education is very important also. I think also several protection funds that are being offered by these platforms are also very important. It's like maybe $500 million, each one of them between $500 and $1 billion. So these platforms, they tend to offer like these kinds of protection funds where in terms of a hack account or a malicious activity or extreme market circumstances, they tend to compensate on some occasions the users. So I think, yeah, products, regulation, and trust of the platforms are the three things that I would see, I would prioritize as a focus next.
Okay, and the last question for you, Andre, as well. Where do you think the industry is heading now?
24/7.
No way.
Yeah, 24/7 for sure. We are also preparing for the new wave of the new instruments, 24/7, not only crypto, 24/7 traditional finance, 24/7 stock trading, putting all these products in one single platform, and as Andreas mentioned here, to make sure that we are protecting enough our clients to keep the funds as safe as possible, and probably that's why the regulator are asking, okay, where are going the money of the clients and where are going the trades, because at the end of the day we need somehow to be sure that the clients' money are protected.
Okay, I think we don't have time. Let's close this. One thing is clear, whether we're facing another cycle or a deeper industry transformation, the firms that adapt fastest will be the ones best positioned for what's ahead. Thank you all for joining, and thank you for being here with us.